GameStop is back profitable yet again. This is turning a new leaf with the meme stock community, sending GameStop shares up well over 40% after they reported earnings just yesterday. What could this possibly do for AMC, GME, and other alike or similar stocks over the next couple of days? Well, we're going to get into the actual numbers here behind specifically AMC, GME, talk about what in this earnings report has these stocks going buck wild. On top of that, just a quick note, someone said my little picture posters behind me were crooked, so you guys got to let me know if they're still crooked. I don't think they are, but maybe my view is off, so let me know. Got to point it out there. So let's get into this video. We have a lot to discuss. GameStop, their stock soars after retailer posts first quarterly profit in 2 years. GameStop posted a quarterly profit for the first time in 2 years. That's a long time to be losing money. And they actually made about $48 million in Q4 2022, a profit of about 16 cents per share. What this means is they are no longer burning money as of the last 3 months. This means maybe GameStop will be around. Maybe if they keep up these efforts, GameStop could reinvigorate the company into something much different and much bigger and better than it ever was. And doesn't that sound familiar? Doesn't that sound like what AMC is also trying to do? Unfortunately, they have not been able to actually turn a profit yet, but it could be around the corner. And GameStop is setting a very good precedent for other quote-unquote meme stocks that maybe they're not jokes. Maybe the jokesters are the ones that are short. If you look at some of the data here and the numbers behind GME and AMC, it doesn't make a lot of sense to be short. And they are definitely feeling the pain after what we just seen. Now, the real reason why GameStop was profitable, let's not kid ourselves, it's not because sales are going up year over year. They declined year over year. A lot of other companies facing the same fate here. So it's not like it's a huge outlier in this current market environment. Lots of companies down year over year. Even Apple was down almost 4% for their sales year over year. But the reason for the profitability is that GameStop slashed its inventory levels and cost from a year earlier. GameStop plans more cost cuts this year. And this is really the year of efficiency. 2022 was as well, but 2023 is vitally important if you want to stay in business in a recessionary environment. It's no surprise the base case scenario for 2023 is for a recession. The odds are we probably get a recession later in 2023, especially after this banking crisis has since evolved over the last couple of days, really the last couple of days, last couple of weeks. Now, like I said, GameStop posted a profit of $48.2 million or 16 cents per share compared to a loss of $147.5 million. Progi, and you guys got to see this dog real quick. Progi. So freaking adorable. Just got him. He's a little shithead though. But nonetheless, on top of all of that, where does that mean these stocks are going to go over the next couple of days? Because that's a big question. And you really want to take a look. Okay. Look at him. Look, he's a little furball. Okay, we got Stock Kitty. We got Stock Doggy. And his name is Pierogi. How cute is that? Okay, let's not get too far off topic here, though. Let's take a look at AMC's numbers, then we'll look at GameStop numbers, then we'll talk about tomorrow's event, or this morning's event, I should say, with Fed Jerome Powell, how that could affect these stocks and where they could go over the next couple of days. Sounds like we have a lot to talk about, but we're going to get through it pretty quickly here. Live short interest on free float, 24.21% for AMC. 125 million shares that are currently sold short. Cost of borrow average of 339%. Cost of borrow max 359%. Cost of borrow minimum of 7.6%. You're starting to see people talking about the cost of borrow rates going up the same way that I have over the last couple of days. This really shouldn't have happened after March 14th. You should have seen one more shares become available to be traded. That should have been a downward pressure on the cost of our rates. And most days since March 14th, you've seen a lot more shares actually available to be lent out, currently sitting with over 350,000 shares that are available to be lent out, rather than the couple thousand we would typically see, a couple hundred, or a lot of the time 0 shares available. Cost of our rates have still went from about 100% after March 14th, March 13th, around then, from Interactive Brokers, now to about 196.5%. That is showing you there's going to be, a lot of uncertainty, a lot of volatility, and it can likely mean the stock can move up higher from here. And especially after what we've seen from GameStop, that's exactly what happened. The stock up 48.84% yesterday. If we take a look at the short interest, cost of our rates, all of that, it's a little different than AMC, but still some strong numbers here. Live short interest of free float sitting at 24%. The live short interest sitting at 62.5 million. Cost of bar rates you're seeing from Interactive Brokers at 30.88%. Shares available 350,000 to currently be lent out. Cost of bar max at about 62%. Cost of bar average at 32%. Cost of bar minimum at about 13%. Now, GME and AMC, they both have a relatively similar short interest. Now, GME and AMC, they do have a lot of different variables here. There's a lot of different things going on under the scenes. Cost of our rates, I would say that's an upfront one. AMC's is a lot higher, and I think that's because there's a lot more attention on AMC, and there is a greater chance of actually seeing that short squeeze. Now, with GME as well, obviously the stock just moved up 48%, and the first profitable quarter in 2 years is a very big deal. So I think in the short term, GME, I should say, might offer a little bit more upside, since we are kind of handicapped in a range until we get to April 27th, or until we get something that is essentially new information, until we get a new update or analyst note on this April 27th litigation. If the odds of this passing through the court system were to shift and fluctuate, in which we need an update for that to actually happen, that's where you could get AMC breaking out of a range. But until we get that kind of information, probably not going to happen. And I do think this is a very strong tailwind for GME. So I think there's a lot of potential here with GameStop as well as with AMC. As you guys know, I'm long a lot more in AMC, but I am not afraid to make trades and play some options in GME. Do not get that confused. Now, let's talk about Fed Jerome Powell and where these stocks could ultimately go. Fed Jerome Powell, he's going to be the key coming tomorrow. And I think it's pretty clear from my perspective here. I've watched Fed Jerome Powell like a hawk over the last 4 or 5 years. I've been investing in the markets. 2018-ish is really when I started to get more heavily involved in the markets. I was involved in like 2017, like halfway through the year I started investing. Didn't get too involved, didn't come into enough capital, right, to get deeply involved the way that I am now. And it's pretty clear when the Fed wants something, they're gonna do it. Now, we have not seen an inflation problem like this in 40, 50 years. That's the #1 goal. The Fed has said multiple times they don't want to have to come back and pull Volcker us. They want to get it right the first time. What they're going to do is they are going to reiterate they have to raise rates until inflation comes down. The markets are not expecting to hear that, since you are now pricing in rate cuts. Going from a couple weeks ago pricing in a 50 basis point rate hike, now to at one point a couple days ago, or last week I should say, pricing in a pause, now pricing in a 25 basis point rate hike, then a pause. Financial conditions have already loosened quite a bit, and even the data that you just got yesterday on home prices, not only that, but as well as pending home sales, up 15% in just a month. That's not very disinflationary, right? That's not really what the Fed wants to see. So I think there's a lot of reasons why the Fed's going to be hawkish tomorrow, why the markets might take it as hawkish, and that's going to be the key deciding factor. If the markets are hawkish, it's going to be a downdraft on these rallies. If they can give you a bullish reaction in the markets tomorrow or this morning, I keep saying tomorrow because it's late at night, right? But technically tomorrow, then well, that's going to be a very positive thing. That's going to be a GameStop gone, just to the moon. It's over. AMC, GME, risk on assets are going much higher, but I don't really expect that to be the base case. Either way, it likely means GameStop, GME and AMC will likely go higher either way, but it might not be as aggressive. Now, we can speculate all we want, but coming tomorrow, we're going to bring you guys that information front and center as soon as we get new information coming out at 2 p.m. from Fed Jerome Powell, and then the press conference at 2:30 p.m. So you guys definitely want to have your planners open, your calendars open. You want to have some time to get into some of these things that Fed Jerome Powell has to say, because this is going to be the most important Fed meeting of likely all of 2023. We're also going to get a summary of economic projections, and that's going to be a new dot plot, and that could really help solidify a move in the markets. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for watching, and I'll see you in the next one.